Greetings all. Saturday, the markets are closed, and this gives me the opportunity to do some explaining. Obviously, when I'm making live trading videos, I don't have the luxury of sitting back and explaining some basic concepts. So let's get to this right now. From my last video, there was a comment made, a very legitimate point. Okay, so we understand, right? Below the midline, you're looking short toward this target, the sell level. Above the midline, you're looking long toward the buy level. That's nice and good. What happens if price keeps crisscrossing the midline? How do you avoid getting chopped? This is the topic for this video. And as soon as you click the like button, I'm going to start. As soon as you click the like button, click the like button. Thank you. Okay, going to start. All right, there are two approaches here. First one is more aggressive. Second one is more conservative. Let's start with the more aggressive idea first. So full confession, more often than not, I choose the more aggressive idea. What is the more aggressive idea? Well, simply if a bar closes convincingly below the midline or above the midline, that's where I take my trade. What is a bar that closes convincingly above or below? Well, for example, here. This is a bar that's closing nicely below the midline. I am short, going toward this target, this sell level. Quick reminder, this is US levels method. This is not part of your subscription. I do not post these levels in Discord because I teach you how to arrive at these levels. Why are they so important? Because these levels are important for the institutions. They move the markets, not us. The midline is the decision point. Everything starts here. This is a target. This is a target. Targets often have reactions. Why? Well, because they achieve their objective, right? And they begin to either lighten up on their positions or they flatten out altogether. No matter what, bounces, reactions are expected from these levels. So now let's go over the more aggressive approach and what it entails. Let me make this nice and big. All right, so how does the more aggressive approach work? I'm looking for a bar to close nicely above or below the midline. Here is a bar that closes above. And again, I'm going to assume that I missed this move. It did start a bit below 930. And if you have a rule that says you're not going to trade before 930, then you miss this move. Fair enough. Okay, now this bar does close above the midline. I'm thinking, okay, I'm aggressive, bar closes above, I'm going to take a long. If I'm taking a long here, and it's aggressive even for me because it's really not convincingly above the midline. It is above, but it's fairly close to it. But if I'm long, if let's say I'm long here, when the bar closes below, now I'm short. Okay, so they tried to go above, they couldn't, they closed below, now I'm short. Where is my stop? There is a hard stop above this pivot over here. But any bar that closes above the midline would take me out of my short. It's just that I also need to have a hard stop because the Nasdaq could have a very big bar, a very big move. So I have to protect myself from that. As a result, I must have a hard stop above this pivot. So if I'm short here, right, I'm a long here, I take a loss on a long, here is my short, and I'm not stopped. I have a nice like 50-point move over here. I easily make up the loss I had here and I hit my target. Now speaking of targets, once again, there is a more aggressive and a more conservative approach. The more conservative approach is to have a reasonable target. Reasonable. What is reasonable in the Nasdaq? In my opinion, well, I always try to encourage you to try and get consistent at $100 a day per mini, okay? But if you want to do more than 5 points, it's fine. In the Nasdaq, 10, 15 points is still fine. You definitely have this available here. The more aggressive approach is to try and hold, like I did, there was a screenshot of me taking this trade, is to try and hold for an attempt at this target, being aware that the target will probably result in a move the other way, and you have to be prepared for this reaction. The aggressive approach allows you to be in the move because the move might not necessarily, as we see here, retest the midline. So it's aggressive, but it lets you be in this move. So everything in trading is a trade-off, right? So if you're going to go aggressive, you are in the move. However, you could get chopped like happened over here, a long followed by a short. It could happen. It could even happen a long followed by a short followed by a long. Now let's look at the more conservative approach. So the more conservative approach will not get you into a trade simply because the bar closed above or below the line. A more conservative approach will say that you want to see a test of the midline, right? A test of the midline, and then some kind of a failure or continuation. So in this case, testing the midline from underneath results in a failure, and you take this and it's a short. Now, you would not be taking this long originally with a conservative approach. Why? Because yes, a bar closed above, but this test of the midline resulted in a break of the midline. So there is no long trade with a conservative approach. Let me show you another conservative approach. It's over here, right? So you're not in this move originally. You are not in this move. Price does break above. There is a nice bar closing above nicely, above the midline. But if you are more conservative, you are not long from here. You wait for price to break through and retest. Here is the midline, retesting the midline, a bar closing up, and here is your long right over here. Where is your stop? Again, a bar that closes below the midline or some kind of a stop. Again, with time bars, you got to be careful because you can have a huge bar the other way, right? So it's either a bar closing below the midline or some kind of a hard stop, again, in a vicinity of the midline. Take a look in gold, and gold has been absolutely amazing with the US levels, let me tell you. So gold opens before the indices, obviously at 40. Here is the break below, right? So we're not short here. Here is the break below. Price comes to the midline, but then just kind of freezes around this midline, consolidates around it. None of this, in my opinion, is really a convincing bar that closes down. Could this be? Yeah, you know what? I guess maybe this one could be. Yeah, you know what? This actually could be. If not, then it's this one. Either one doesn't matter. You would never be taken out of your short position. No bar closed above and kind of looking left. You still would not be taken out even on a spike of anything. If by some chance you were, you would definitely get back in with this bar or even with this bar over here. What would you be targeting? If you're conservative, you have a hard target of some kind. Again, $100, $150, $200, whatever. If you're conservative, this is your target. A hard, agreed upon target. That's part of your trading plan. More aggressive is to try and hold it to this target, this sell level. What happens? Same as with most markets, most of the time, price comes in and there is a reaction from this target. You will learn how to find this target before the session opens, and you will understand why these targets produce these bounces. In this case, there is not much difference between an aggressive and a conservative entry. Aggressive entry, again, would simply be upon a bar closing below, like right over here. This bar closes and you are short from here. What is your stop? Again, a bar closing above the midline, some kind of a hard target above the midline, but just short from the bar closing down. That's the more aggressive approach. Here is the YM 930. With the YM, you had to use the aggressive approach if you wanted to see that move. There is no test of the midline. I cannot consider this spike to be a test of midline because it did not reach it. And if I'm going to say conservative, well then it needs to reach it or at least be really close to it. But this is just too far. I cannot consider this to be a test of the midline. Only an aggressive approach would work here. Again, targeting this target. Target missed by a couple of ticks and they are reacting. Now, when they test the midline finally, there is no failure, right? So there is no short. Yes, they get to the midline, but there is no failure. There is no touch of the midline here. Again, if we're going to be conservative, truly conservative, we cannot be estimating. So there is a break here, price breaks, but we're not, I'm sorry, but we're not long, right? We're thinking conservative. What is the conservative approach? You want to see a breakthrough and retest right over here, then a bar. And now it's a question. Do I need to wait for the bar to close? Not necessarily. I would say any kind of a break of this high, of this bar that tests the midline, any kind of a break of this high to me is a long. Again, more conservative is to have a fixed target, some kind of a fixed target. If you have it, you got it. If not, you actually had another test of the midline, right? So another test of the midline, bar closing up, but this is too close. I would say this is a good bar here. They tested a couple of times. This one is nicely closing above. Crude oil opens at 9 o'clock, so that's a bit pre-market. So again, if you're not trading before, let's say, the pit session open, you would have missed this trade. That's all right. You got to wait for a test of the midline. That is the most conservative, waiting for a test of the midline. Here it comes, a test of the midline. Bar closes nicely above, and this is a long. Right here, again, you should have some kind of a fixed target, $100, $150, whatever. Your stop is below this pivot, obviously never reached, and you would trade this for a nice profit. So S&P, again, the nice aggressive move happened before the US session opened. If you don't trade before, then you're missing this move. That's okay. Here is a test of the midline, and the bar still closes below. Not really enough. I would want to see this low being broken. This would have been my short right over here, if you can see this. So bar is testing the midline. I want to see the low of this bar that tested the midline getting broken for a short right over here. And this is, again, this is like 3, 4, 5 S&P points. Should be plenty for a more conservative approach, just to have a fixed target. If not, where's your stop? Your stop is above definitely this pivot over here, any kind of a bar that closes above the midline or this pivot. So then breaking through, but again, you're not long from here. If you are conservative, you are waiting for a test of the midline. Price tests it, actually closes below it. So then once it closes below it and then nicely above it, I could consider it still a part of the more conservative approach to go long. If not, I would be waiting for this. This is truly a conservative approach here now, that price comes down and tests the midline and then a bar closing up. Again, why does price test this midline so many times? Because this is decision point. This is the important area. From here, a decision is made, and the decision is made to go up to the buy level. A market that is not one of the markets we normally watch, but I brought your attention to this market, natural gas. It responds so amazingly beautiful to the US levels method, as really every market. But this one, it is so anxious to achieve its targets that sometimes it just kind of misses the midline. That's what we see here. So if you are a more conservative trader, you have no entry here because there was no test, right? A more aggressive trader would say this bar, this is kind of an attempt at the mid, bar closing up just long. And then it reaches the target just beautifully and does exactly what it's supposed to do, achieving a target and reacting. So I hope this video helped. I just want to make a point. I am not saying that there is a way to avoid every losing trade, right? We all understand there is no such thing. Losing trades are just part of the game. I am saying if you use a more conservative approach of not simply taking a long or a short trade upon bar closing, but upon a retest of the midline, you will avoid some losing trades. But what is the trade-off here? The trade-off is that sometimes you're going to miss beautiful moves that simply do not quite reach the midline upon retest. So that's something you need to figure out for yourself. What is it that you are more comfortable with? Again, for me, most of the time, I tend to be on a more aggressive side with this. simply because I know that, look, price is going to reach one target or the other. It will happen. If it costs me some money in the form of losses to achieve this target, I'm okay with that. So maybe it would cost me X amount to make X plus 200. That's okay. I can live with it. But again, if it's something you're not comfortable with, consider the more conservative approach. Hope that helped. Thank you all. See you next time.